guaranteed you're getting that 39 million. Like, there's no way you can blow through 2.5 billion. Unless you're building a jet to go to space. Hey everybody, today I am continuing the series on Palantir's investments, equity investments. Most of them were actually SPACs that went through, the reverse takeover, and then they went public. But I still think it's absolutely worth looking into these investments to see, are they going to be a home run? Are they going to be innovative? Are they going to change the world? Or if it's just a total L, if it's a total loss, and all of this is just, a lot of hype words, and these companies have no execution, no experience, no profits, and they're just a money pit. So I've already done Cellularity, Faraday Future, Astrocast, Black Sky, and Lilium. And now I'm going to go to Roivant Sciences. Roivant is actually one of the equity investments that I've researched, and I actually feel like it's so promising. Like, all you need is one blockbuster drug. And I said this with Cellularity as well. Remember Moderna? Moderna was working on an mRNA vaccine for the longest time ever, and were not profitable. And then COVID-19 happened, and they were able to act quickly and get a vaccine out, and their stock went 10x, 1,000% increase. Roivant is a pharmaceutical company, and they have this, cultural saying. They call each department that they're working on as a vant. So these are all the vants that they have. So these are all independent businesses. So they have the Immunovant, Dermavant, Genevant, and so on and so forth. And, Dermavant is exactly what it sounds like. They're working on dermatology. So these are all independent businesses with leaders. So Roivant is really like a holdings company that invests in promising drugs and brings their know-how, brings their expertise, brings their ability to use artificial intelligence to calculate risks, to calculate which drugs are worth pursuing, and then they go for it. Now, let's go to the side where we could see what kind of drugs they're working on. And, you can see that some of them, they're really advanced. So here, the one that's in phase 3 and the one that's actually going through registration is in the Dermavant business for psoriasis and atopic dermatitis. So atopic dermatitis is essentially eczema. So psoriasis and eczema, and they have the same product, and this market alone is expected to be worth, I believe, $21 billion, and it's expected to hit $31 billion just from these two drugs. And one is actually on track. Like, things went well. They went through every phase and it went well. And now they're trying to bring that drug for eczema, and if it goes well, then this treatment can be used for multiple conditions. Then they have another drug that's in phase 2. So they have 5 here in phase 2. The thing is that, with pharmaceuticals, you don't know if it's always going to work. If it doesn't work, then it's a big flop. But when it does work, it could be the next Moderna. So here, you see that their ownership, let's look at fully diluted because that's what counts. So you see that this holdings company, Roivant Sciences, they have holdings of various divisions ranging from 24% all the way up to 99%. So it is interesting. And some of these divisions are actually publicly traded. So Immunovant, Arbutus, CO Gene Therapies, and Myovant. So it's a big operation. Now, what kind of other therapeutics are they working on? That's in the discovery phase. So there's a lot here. There's one called AR for prostate cancer. It's in the preclinical phase, but this looks promising because this is a big problem for men. I think 1 out of 5 men get prostate cancer, so it's a big deal. So now let's get into the weeds. What is the name? The name is Roivant Sciences. Ticker is ROIV. Trade on the Nasdaq. They went public on October 1st. Their headquarters is in Basel, Switzerland. They were founded in 2014. The vision is not publicly stated, but their mission is to improve the delivery of healthcare to patients by treating every inefficiency as an opportunity. Roivant develops transformative medicines faster by leveraging the Roivant platform. This is what I was talking about, their platform, to launch Vants, which is divisions, which are nimble and focused biopharmaceutical and health technology companies. How will they change the world? They are developing therapies to improve the lives of patients suffering or dealing with a variety of diseases. Where they have really proven themselves is with back-to-back successes by basing their drug discovery capabilities based on their computational platform, which is a physics-based simulation tool married to machine learning, which allows them to generate predictive power. Very wordy here, but they do say they have something internal that can help them decide which therapeutics are worth pursuing and have a better chance of being commercialized. Critical points, and this is big. There's a lot of drugs in the pipeline, over 40, which is great, but it is, again, high risk, high reward. It is a gamble. They can fail in late stage trials, like they had an Alzheimer's drug, where Alzheimer's is a terrible disease, but they had an Alzheimer's drug that was in late stage trial and it failed. And when it failed, that stock tanked. What if dust settles and there are no approved therapies and they just keep spending and nothing ever comes from it? And then, there's 2 in phase 3 trials and there's 10 in phase 2 trials. So, there is a pipeline. The funnel is like, it might not be like this. It might be like this and they all get approved, but you never know until you get there. So the total addressable market, for pharmaceutical industry, they say it's about $1.3 trillion. So it's a massive market, and it only keeps getting bigger, with these diseases that keep coming up every year. But right now, what is realistic is the phase 3 dermatherapy that they have. This addressable market is 21 billion and expected to hit 31 billion. So this, I would say, is realistic. This is just like, the whole market, and it's not really worth getting excited about. So the financials, they have about 2.5 billion in cash, total assets of 3.1 billion, liabilities 652. So this is good. Clearly, assets outweigh the liabilities, and with the cash balance, they can survive. They can survive and could continue to do studies, continue to do clinical trials to make sure that they can get a product to market. The total revenues right now is 22 million, so it's really not impressive. It seems like it's just, puffing the chest out, and they're like, yeah, we have all these things, but you have no revenues, man. You only have 22 million. That's nothing. So operating income, 839 million loss. Half of that is share-based compensation. Net income in millions, a loss of 327 million because they had a huge offset of 444 million because they sold the division. So, if they do have a profitable division that looks promising, it's possible they can sell it to the highest bidder. So that is interesting. So Palantir's investment is $30 million. How could Palantir profit? Well, they have a $39 million deal over 5 years. And it's 39 is the minimum payment over 5 years. So this is a screen grab that I took. We entered into a master subscription agreement for a 5-year period. The remaining minimum payments for the software are 39 million. So the key word I want to stress here is minimum. Maybe it's a lot higher. Maybe it's based on which drugs that they can also contribute to get commercialized. So it's a good deal. It looks like a good deal. You invested 30, you have 39 minimum, you got 2.5 billion in cash, guaranteed you're getting that 39 million. Like, there's no way you can blow through 2.5 billion. Unless you're building a jet to go to space. So now the news. So these news, it's a lot of interesting articles. The former CEO Ramaswamy closes deal at $7.3 billion, and he steps down from his CEO role to become an executive chairman of the company and to do more front facing roles and do more public speaking roles. So he's stepping away from day-to-day operations as the CEO, that which is incredible, because the CEO is actually quite young, but he's super educated. He did his education at Harvard and got his law degree at Yale, so he is a go-getter. And I've read some stories about how he's bought pharma companies that were in a loss position, or drugs that were in a loss position or didn't look promising, and he would get a 3,000% return for investors. So he knows what he was doing, and he's operating this business as a pharmaceutical holdings company, and not as a day-to-day in the grind trying to develop the drug with the scientists. He's a businessman first. Now, Swiss biotech Roivant Sciences enters Wall Street with a 611 million SPAC merger, so that everybody knows. Roivant provides corporate updates. Roivant R&D Day 2021. This is a very good video as to what Roivant does. We'll watch it at the end. And then the financial results and business update for the quarter end. So, that's the information that's captured here, so we don't really kind of need to get into it. In terms of the team, they do have a lot of different individuals. We can look at a few, the ones that are most important. So the CEO, he joined Roivant in March 2016 and previously served as CFO, so very business oriented. Vice president at Goldman Sachs, very business oriented. So he has no real pharmaceutical experience, but he does seem to be a classic, well-trained corporate business person who can lead a company and looks at things from a strategic point of view. You have Eric Benker, who's an MD, so he's a doctor. He was a physician at New York Hospital, so he is a competent individual. President and Chief Investment Officer. So Mayuk serves as President and Chief Investment Officer of Roivant. He served as Chief Business Officer and President of Roivant Pharma from 2000 to 2015. Was a healthcare-focused analyst and portfolio manager. So all of these people do have a strong business background. But it gets interesting here. Dr. Sutame earned his MD from Harvard Medical School and his bachelor's in biology and bachelor's in literature from MIT. Very competent individual. Now let's go check out the board. So Vivek Ramaswamy. So this guy is a legend. He's the founder of the firm. And ever since the closing, he went to an executive chairman position. Prior to taking the role, a CEO from 2014. Ramaswamy previously served as a member of the investment team at QVT Financial from 2007 to 2014. Mr. Ramaswamy was previously as a director of Roivant Sciences, Axovant Sciences, and Artobus Biopharma. Mr. Ramaswamy received his AB in biology from Harvard College and his JD from Yale Law School, where he was a fellow. So, very competent individual, clearly. Let's see the second person that they decide to put next to him. Andrew Lowe, director of Roivant since 2016, from MIT. These guys are all pretty big school names. Harvard Law School, of course. Harvard Law, okay. Harvard College, fine. Harvard College. Yeah, nothing there. Oh wait, no, this is big. What am I saying? Nothing there. Prior to serving as chairman of the board and representative director, he served as president and CEO of Sumitomo Nippon Pharma. You don't know. How are you gonna know? So they're based in Tokyo. Revenue in yen, 516 billion. So they're a $4 billion company. They make $4 billion in sales. $4 billion in sales is no laughing matter. They have some heavy hitters in the management team. All right, so I think it's totally worth looking at this video with the former CEO at R&D Day talking about Roivant and what they do. It is a very interesting video, and you can see that he's a very charismatic person who speaks pretty well. So let's look at the Roivant overview first and take it from there.
Welcome to R&D Day, and for those of you who don't know Roivant, our mission as a company is to discover, develop, and commercialize drugs faster and more efficiently than the rest of the pharmaceutical industry. We do that in two ways. The first is by aligning the incentives of our staff more effectively than an average pharma company. And the second is by deploying technology across the discovery, development, and commercialization process. On the incentive alignment front, we build our business a little bit differently. We're structured the way a multi-manager platform in the asset management industry would be structured, as a family of small companies, decentralized vants in our model. What that means is every scientist, every developer, every commercial leader at Roivant and in our family of companies has uncapped upside in the projects they uniquely work on, in addition to the broader forms of compensation that they receive. And what that allows us to do is to be able to turn the traditional pharma incentive model upside down. In a traditional pharma company, if you take a personal risk and you succeed, you don't really participate meaningfully in the upside. If you take a personal risk and you fail, you might actually experience meaningful downside in the form of job security, budgetary cuts, and so on. We turned that incentive model upside down by allowing employees, when they succeed, to actually participate in the upside of the products they generate by giving them equity in their unique projects, in their vans. At the same time, we also acknowledge that sometimes those projects fail, and we have actually been successful in redeploying the talent that has grown up in Roivant over the course of the last 7 years throughout our ecosystem of vans. So that's the incentive alignment model. But we're also a little bit different than venture-backed biotech companies in that each of these companies is supported by Roivant to operate more effectively than an average biotech company. And a big part of how we do that is through the development of technology at Roivant itself, the parent company. Of the over 800 employees across our family of companies, across our family of 20 vans, over 300 of those sit at the parent company itself, at Roivant, developing technology that allows us to discover drugs more effectively, develop drugs more effectively, and also eventually commercialize them. On the discovery front, you're actually going to hear today, in some ways for the first time publicly, revealing the ways in which we have deployed artificial intelligence and machine learning algorithms to be able to discover small molecules and to discover novel treatment modalities, including degraders, more effectively than the rest of the pharma industry, and what we have in store in the future as we continue to discover more drugs using our technology. At the same time, we also apply tools that allow us to conduct clinical trials more effectively, in some ways that allow us to create technology that we're independently able to commercialize through third parties as well, which you'll hear about over the course of the presentation. 7 years ago, all of this was a vision. I'm proud to say that today it's actually a reality, backstopped by several FDA-approved products that were developed at Roivant that would not have been developed but for our model. We have, we hope, many more FDA approvals in our future as a company, and we continue to develop drugs across the full spectrum of discovery stage all the way through phase 1, phase 2, and phase 3 stage programs. We also have our first program preparing for a commercial launch, which will be a new chapter for us as a company.
All right, I stopped the video once they got into too much details. It's hard to follow. It's something that you need to take your time, have a nice coffee, watch it in the morning. But what I do notice is that there is a lot of data, a lot of simulations. This concept of chip to clinic, this company really does embrace data, and I can see why Palantir invested in them, because this type of data could be interesting to help other companies pursue their drug discovery, drug development, and it could be a powerhouse of data gathering between a variety of pharma companies. They could, based on their studies and the universities that are doing their studies, and it could be a syndicate of data gathering, and if it's all put together, maybe Palantir can help unleash or unlock a pathway to a drug that people don't see right now. To conclude, if we look at their pipeline, they have a lot of promising drugs in the works. They've already sold one of their companies to a potential buyer, or to a buyer, for 444 million. So Roivant has proved that it's able to have some successes based on their strategy. they seem to be a company that's not really focused on generating revenues, but more so generating vans, successful vans, creating successful divisions that can then be sold to other investors or enter into a licensing agreement, or so that they can generate positive cash flow to keep reinvesting in other drug pursuits. To conclude on Roivant, the total investment was $30 million. They lost about $4 million so far on this investment. However, it is unrealized, and all it takes is one major discovery, and the share price will have a different valuation. So now, do I think it is a innovative and good company for the world? Absolutely. Are they profitable today? No, because they went public and they had major shareholder compensation. But also, even if they didn't go public, they would barely break even. So, there's no profits. Do they need more capital? I would say no, because they have a strong balance sheet. Rather than saying that it's a red, I'm actually going to change it to a yellow, because if we recall here, they had $839 million in operating losses, half of which was share-based comp. So let's say this was 400, but then they also sold the company for 444 million. They sold a portion of their Vance, and they made a huge investment, a huge return. So, they are doing good. They almost broke even from a net income perspective. And, the risk versus reward, I think it is absolutely worth it, given how much drugs they have in the pipeline, and they're not, niching themselves to one particular division. I think the risk versus reward is very little, or it's justified. The reward seems to be so huge. So for those reasons, I give this a win. I think this investment is going to be a win for Palantir, and it's going to be a win for the world if they can put out some interesting therapeutics. So that's it for me on Roivant. Now I am going to jump in to the other ones that are coming. There, we have Sarcos Robotics, which is next. So I am going to shoot that, and we'll make sure to hit that subscribe button so you can stay up to date with the news that I'm doing. This channel's not 100% dedicated to Palantir. It's just I want to finish this project of going through these equity investments so I can understand for myself as well. But I am going to discuss a lot of other things that are personal finance, tax, ramble on about other stocks, other companies. And if that's something that interests you, make sure to hit the subscribe button, and leave me your comments, leave me your likes. I always appreciate your support. So thank you so much, and I'll see you on the next one.